the years, I think I've only had one person, one farmer tell me, no, I won't accept silver for, my eggs or chickens or whatever. But just understand that gold and silver are themselves money. And farmers understand that. And when the system comes down, it won't be but a week or two before people understand, hey, wait a minute. Gold and silver are money. I'm not going to accept paper dollars because what are they? What are they backed by? They're backed by a bankrupt issuer. The action on the exchanges are changing because it's moving. They're all moving more toward delivery. They're all moving more toward a cash and carry market. Now, COMEX was not designed as a cash and carry market, and you can see the inventories have declined, especially in silver. You can see that with LBMA. You could see that with Shanghai, even though Shanghai is basically a cash market. But I've been adamant all along is that the end game, gold and silver would end up being cash markets, cash and carry, and the futures would be irrelevant. It's very possible to see gold at $50,000 or $100,000 bid and nobody willing to sell. Yet COMEX has got gold contracts offered at $10 an ounce, but nobody's willing to buy them because there's no gold behind them. So that's where we're headed, and that it all ends in what I've talked about for so long: a failure to deliver. Somebody stands for their metal, and that metal doesn't exist. They can't get the metal, and then it's completely game over because confidence will be 100% broken.
Gold and silver are not just commodities. They are mirrors reflecting trust in fiat currencies. The dollar, euro, yen, and pound derive value almost entirely from confidence. Rising metal prices signal declining faith in government-issued money, which is why policymakers historically resist them. Since the late 1990s, coordinated efforts helped restrain precious metals to reinforce currency dominance. That framework is now fracturing. As physical demand outpaces paper supply, the credibility of pricing mechanisms weakens. Once markets question whether contracts represent real assets, confidence collapses, not only in metals exchanges, but in the broader financial system they support.
Well, understand the dollar itself, the euro, the yen, the pound, they're all fiat currencies and they all are valued because of confidence. Confidence goes another step further. The reason, and going back to the reason governments don't want gold and silver to go higher is because that shows a lack of confidence in their currencies, and it makes it more difficult for them to borrow. The suppression scheme on gold and silver really started in 1996 with Robert Rubin with what he called the strong dollar policy. And the strong dollar policy basically was dollar good, gold bad. And, they were able to, for years and years, they were able to put a collar on gold and silver. That collar is breaking, and as that breaks, so does trust. And you're right, there's so much, it's hard to tell what's real and what's not real. I posted the young Korean guy on my website and got about 5 or 6 emails immediately back saying this is AI. And I said, yeah, I know it's AI, but his logic is sound. Now, the only thing I've heard him or it or whatever say that was speculative and it looks like was not true was the CFTC meeting at 9 o'clock this morning telling people that you can't buy, like the Hunt brothers back in 1980. But his logic on that was, in my opinion, was 100% correct. If the COMEX comes out and tries to pull the same bullshit they did with the Hunt brothers, where you cannot buy, you can only sell, that will be the end of the COMEX contracts, because that will immediately, people will immediately buy every physical ounce of silver, every physical ounce of gold that they can find. You'll see that bifurcation between paper and gold come to 100% fruition, and silver.
We may have seen the foothills of that mountain already when there were arbitrage opportunities that opened up with the Shanghai and other physical markets leading by several dollars above this foresaging this launch in silver prices this year. Any comments from you on the fact that it seems like these Asian or across the seas physical markets have been leading the way and basically showing that lie to be what it is, the paper price in the West?
Yeah, and it shows that the U.S. is no longer the centric, most important market in the world, if you will. Gold and silver have been bought, and the deficits, the supply deficits, have been exposed, not because of Americans. I mean, as a broker this year, we took more sell orders from clients than we had combined in all the years of our careers. Or at least I did. I mean, I took tons and tons of sell orders this year. So North America was a seller, yet the price of gold and silver exploded higher. And the reason being, you had central banks from all over the world buying. You've got India importing massive amounts of silver. China's a huge buyer. Russia's a buyer. And mentioning Russia, this whole thing got kicked off when Biden tried to weaponize the dollar, the SWIFT clearing system, and confiscate the 300 plus billion that Russia had in reserves. And those are still confiscated. And the world looked at that and said, hey, wait a minute. If they can do that to Russia, they can do that to anybody, including me. And that's why you've seen sales of treasuries and purchases of physical metal delivered out to these entities.
Every leveraged system has a breaking point, and in metals markets, that point is delivery. If enough participants demand physical metal that does not exist, the result is not volatility. It is failure. A forced cash settlement or trading restriction would instantly expose the paper-physical divide. History suggests that attempts to cap prices or limit buying only accelerate physical hoarding. At that moment, futures markets become irrelevant, and pricing shifts entirely to physical venues. The real danger isn't price spikes, it's the permanent loss of trust. Once confidence is gone, it does not return easily.
You did have some very large estates liquidate this year, but you also had people just trying to live. I need to sell 5 coins or 10 coins or 1,000 ounces of silver or whatever. You've had North Americans are feeling the pinch between the cost of living going up and the incomes, the wages aren't keeping up with it, and that's come to a head. So you had a lot of selling. And same thing with silver. The only way to buy silver back in the 70s and early 80s was via junk silver. I mean, there were other ways, but primarily that's what North Americans bought, was pre-1965 dimes, quarters, half dollars. And a lot of those bought in the $30, $40, $50 range. And for 20, 30, 40 years, people were thinking, if silver ever gets back to $50, I'm going to get my money back out of it. And that's what you've seen a lot of sellers of junk silver, and the dealers got overwhelmed, and their response was to lower their bids. And whenever anybody sold to them, they sent that junk off to refiners to melt it down. So if they're taking a 6% or 8% or 10% discount bid to customers, they're picking that up when they get it refined. Now, right now, yes, that's uncomfortable because you're looking at the bid now, $5, $6 under spot for junk. So that's not comfortable if you own junk silver. But I think if you wait 3 months, 6 months, a year, this glut of sales from the 1970s and 80s, once that funnels its way through the snake, guess what? There's way less junk silver available or in existence than there was before this. And you can put this down. You know, I'm sure people come back to me if it doesn't happen, but in my opinion, when all is said and done, junk is going to be the highest priced silver in North America. It will eclipse Eagles at some point, because they make Eagles every year, and this year they've destroyed the supply of junk silver outstanding.
Recent price action reveals a deeper truth. Western markets no longer dictate precious metals pricing. Physical hubs in Asia have increasingly led price discovery, at times trading well above Western paper prices. This reflects real demand, not speculation. While North American investors have been net sellers, global central banks and emerging economies have aggressively accumulated metal. The turning point came when financial sanctions revealed that reserves held in foreign systems are not truly sovereign. That realization triggered a global reallocation away from paper assets and toward physical gold and silver held domestically, accelerating the erosion of Western market dominance.
Yeah, there's no question about it. Refiners all over the world are running 24/7 at 100% capacity. And they've been doing that, I think, for the majority of 2025. I think it started probably in March or April, where the refiners started getting overwhelmed. And the result is an unbelievable value. If you're looking to buy silver, it happens to be that the best form to own, constitutional silver, is also the cheapest form to own. I mean, you could buy junk now at spot, 50 cents over spot, and you're looking at what, $6, $7 on Eagles, $3 or thereabouts on bars. Junk is the cheapest form, and it's the best form to own. So you're getting the best for the least. I mean, that's a bargain. Historically, the pre-33 gold is traded at a 20 to 30% premium to spot. If you go back to 2011, when there was fear of confiscation, you could have sold a MS-63 Liberty at 80% over spot, turned around, taken that cash, and bought an Eagle at 6 or 7% over spot. So you picked up lots of weight. You got a lot more ounces. And here we are, the opposite, 180 degrees of that. It makes sense, except for the tax ramifications, it makes sense to swap Eagles or any other form into pre-33 gold, because you're buying it basically at spot. This has never happened. It will unwind itself, and when it does, you're going to see that they'll go back to 20, 30% premium over time. And if there is a whiff of a fear of confiscation, watch how fast the premiums come back to the pre-33s, because they are collectibles. Oh, absolutely. They're the best form for an American to own. If you're going to own silver in the United States, it should be junk silver, unless you're in an IRA. Same thing with the pre-33 gold. If you're going to own gold in the United States, it should be the pre-33s. It's as cheap as any other product, but you're talking about 100-plus-year-old coins. They're collectible, and being collectible, they're not bullion. So if there's an executive order like FDR put out in 33 to confiscate the gold, hey, you are not a hoarder, you're a collector.
Silver's supply structure makes it uniquely vulnerable. Most silver is not mined directly. It is produced as a byproduct of copper, lead, zinc, and gold mining. With base metal production facing declining grades and long development timelines, future silver supply is constrained regardless of price. Meanwhile, decades-old stockpiles of constitutional silver are being liquidated and melted, permanently removing them from circulation. This temporary selling pressure masks a deeper reality. Once that supply is exhausted, it cannot be replaced. When refiners run at full capacity and inventories vanish, scarcity becomes visible, suddenly and violently.
My response would be, don't be stupid. Don't pay 100% premium on gold. I mean, gold is gold, with the exception of pre-33 gold. Yeah, it's not confiscatable, so there should be some type of premium. And like I said, historically, that premium has been 20 to 30% in that range over spot. If somebody's wanting you to pay more than that, that's ridiculous. And in today's market, you should be paying within, I don't know, $100 a spot. And unless you go up to MS65s, MS66, you're not going to be, $300, $400, $500 over spot. Yeah, when things go bad, when the shithouse comes down, your coin is going to be, an ounce of gold is going to be an ounce of gold, an ounce of silver is going to be an ounce of silver. That'll get sorted out once things reboot and we have a system coming back up. But once the system's down, an ounce of silver is going to be an ounce of silver, an ounce of gold is going to be an ounce of gold, and basically you're going to be able to get for it whatever you can barter. And you get a lot of people that say, oh, well, you can't eat gold or you can't eat silver, but farmers, the only way they can spend their product is give it to someone for something in return. And I've talked to many, many farmers over the years. I think I've only had one farmer tell me, no, I won't accept silver for, my eggs or chickens or whatever. But just understand that gold and silver are themselves money. And farmers understand that. And when the system comes down, it won't be but a week or two before people understand, hey, wait a minute. Gold and silver are money. I'm not going to accept paper dollars because what are they? What are they backed by? They're backed by a bankrupt issuer.
In periods of systemic breakdown, complexity disappears. Premiums, branding, and paper distinctions vanish. What remains is weight and trust. Gold becomes gold. Silver becomes silver. Throughout history, barter economies quickly rediscover that precious metals function as money without permission. Farmers, merchants, and tradespeople intuitively understand this. Paper currency, backed only by indebted issuers, loses acceptance first. Collectible and historical coins offer an added layer of protection, existing outside modern monetary systems. When confidence resets, metals don't need to be explained. They are simply recognized again for what they've always been.